China's foreign exchange reserves have surged $130 billion to 3.44 trillion in the very first quarter. This is the largest quarterly rise in foreign exchange reserves since the second quarter of 2011. This is quite a big change from last year, when money was actually leaving the country. Cash inflows from abroad have been responsible for producing rapid credit growth in the first quarter. Total new financing in the economy increased 58% to 6.2 trillion renminbis compared with the first 3 months of 2012. Now, debt concerns in China has caused rating agency Fitch to slash its sovereign credit rating. This is the very first of its kind by such a large international agency since 1999. Shadow banking has created concern for the agency. Also, outstanding trust loans and corporate bonds more than doubled year on year. An economist with Mizuho Securities believes the rise in foreign exchange reserves is a very clear sign that capital inflows are back. We will see more and more worries about this in the coming months because of the massive money printing in the US and Japan. Now, despite Beijing's strict capital controls, Wednesday's export data revealed it is one of the ways cash is getting past regulators. Also, recent Chinese export figures show an increase of 10%. However, exports to Hong Kong rose by a dramatic 93% in March. Analysts believe this shows that companies have been overbilling as a way of drilling more cash into China. Lu Ting, an economist with Bank of America Merrill Lynch, is concerned the surge in credit figures will produce fears regarding inflation, government debt and shadow banking. Mr. Liu said China's monetary policy makers are in a tough position to balance short-term growth stability, market worries and long-term economic health. Investors are now awaiting the most recent growth data, which will be released on Monday. Annual GDP growth fell 7.4% year-on-year in the third quarter of last year, but actually bounced back in the final quarter. Also hitting headlines in regards to China, we saw European Commission officials fly to Beijing for trade talks with the Chinese government. This new proposal by the EU would increase the size of possible import tariffs against companies abroad that are gaining from unjust government subsidies. And finally, we also saw the renminbi finish slightly lower against its US counterpart today in Asia trading. Traders believe this is after the People's Bank of China fixed a moderately weaker official midpoint to pull the currency down after hitting a record high yesterday. Well viewers, that is it for right now, but do have a look at Jennifer Cordonley's Tuesday interview with Doireann on Chinese inflation. But for now, goodbye.